wanted to see how it was performing there. So we take a look at how the trigger set up here in terms of these dealer levels. So it's market makers and dealers. So let's take a look at these market makers liquidity levels. So you can see here that we get a trigger at 1525, and you can see it's the S&P market makers are now hunting top line liquidity pools to trap buyers. Watch for book flip offers. 1525. Okay, so that's 1525 on the screen there. So obviously what they're looking to do against our trigger here is we think that the market makers are now hunting to try and trap some buyers up here. We've already seen them trapping them once, but now we're thinking they're going to try and trap them a second time into that price. So obviously that's at 1525. Sorry, 1525, yep. So we are not quite there yet. So we're getting an early warning to the possibility that they're going to try and bring the price up into that liquidity pool to trap a buyer in there. As we go forward into that trap, you can see that the dealer's then at 1529. Look at what we see in the detail about how this trade unfolded. The dealer added a bid to press the long into aggregate demand. In other words, that trapped buyer, right? 1529. Guess what happened? There's the candle right there. 1529 is that candle there. That's exactly what happened. The dealer did exactly what we thought they were going to do. So then what happens? The ES dealers bidding into press long. That's the one we've just been talking about. So they're still trying to press long. And then what happens? The market maker started to add bids below. Watch for trapped shorts to buy into. Okay, so you're looking at that and you're saying, okay, so what are they thinking here? The market maker started out by hunting top line liquidity into 1530. Do you see it? Sorry, it keeps scrolling down, guys. We're on this part here. So into this phase here, the market maker was hunting top line liquidity pools to trap buyers, 1530. Market maker hunting top line liquidity pool to trap buyers, 1530. So there's 1530 now taking place. We've now got the trap buyer. We now have the opportunity to sell short against the trap buyer. 45.84s, and it drops back down again. And as we see the price starting to drop back down again, you can see that they try and press it. The market maker at 1533 is now adding bids below, 1533. So there's 1533. So where are they adding bids? Below. So what does it mean, bids below? We look for the yellow line. We notice where the yellow line is, and we know that the market maker is adding bids below here. Do you see how that helps us to then find the possibility of a buy opportunity when it trades into that, because we know the market maker's adding bids below here? So we can recognize that it is an exhaustion print. We don't need to see any selling coming in because we got the price lower than it was before. We're able to then use that either as a Heisman entry or not. We're able to take advantage of that trade, and obviously the little takeaway was another profitable trade outcome. So the devil very much is in the detail in these little moves, aren't they? You know, obviously there's a lot of things happen. There's a lot of stuff that develops and brews in the background. And obviously it's a case of putting together the storyline, and they can change very, very quickly. Hedging, buying into hedging, selling into hedging, buying into hedging, selling. You know, we've obviously got to, we'll find the things that make sense to us once we start to recognize what we're looking for. But obviously it's a scalper's paradise. When we see that, for example, at 1550, we were getting a sell program, and at 1549, we got a buy program coming in. So at 1549, we got a buy program. The buy trade was at a price of 45.80. And then at 1551, we got a sell program at 45.82. We made $100 on the buy, and now the short trade's making us a couple $100. So it's a scalper's paradise on these triggers, isn't it? Scalper's paradise on these triggers. You know, so it's up to you whether it's the scalping that you like to do, whether it's suitable for that type of purpose, but at least you know what's likely to happen. So if you don't like scalping, you know what the short-term scalp is. So if you're trying to buy when we're seeing a sell algorithm coming in, you know you're going to be passive. You're going to be able to quietly sit below the bottom edges and then take advantage of the opportunity when it presents. So that little sell program at 1550, that little sell program at 1550 has just gone from 82s to a low price of 79s. 3 points, $150 on the back of a $100 winner. $250 in the last 3 minutes, guys, on those triggers. $250 in the last 3 minutes. Assuming that that's the trade you were looking for, assuming you liked the idea of what was setting up, assuming that you saw the trade for yourself. In other words, it gave you confidence that when you got the buy trade at that point there, so you got these buy programs kicking in, you had the buy trigger here at 43, then you got a buy trigger at 49, you got another buy trigger here at 49, and then you got a sell trigger at 50. So you got a buy trigger at 43s, and you started to see the 43 buy trigger coming in. That was at a price away down at the bottom edge. That wasn't part of that scalp trade. But then at 49, you got another buy trigger. And then at 50, you got a sell trigger. And that sell triggers was worth 150. The buy trigger was worth 100. $250 of profit per contract in that 1-2 phase right there. $250. And it took you 2 minutes to make it. Literally 2 minutes to make it, guys. Crazy, isn't it?